People all over the world are looking to the U.S. for investment, and when they look at the U.S., they look at the Gulf Coast because of the advantages that we have.
Entergy had a good quarter, and you've been making progress on executing your business strategy. So tell me more about customer demand that is driving strong growth.
A lot of things are moving the growth forward for us. It's a very diverse customer base that we have, and it's been growing for a long time. Not a lot of people appreciate how much growth we've had. Our compound annual growth rate for our industrial sales is over 5% over the last 14 years, which is really high for the electric utility industry. Of course, now we see quite a bit more. Right now we're talking about 11 to 12% long-term industrial growth. And that's driven by some of our traditional industries, petrochemical companies, LNG facilities. Increasingly, it's also data centers that are bringing up a lot of industrial sales growth. So it's very exciting for us to get to that kind of industrial sales growth rate.
So tell me more about the Entergy region. What makes it attractive for companies that are looking to move there?
First of all, we have a lot of natural advantages. We are located along the Gulf Coast and the Mississippi River, which means that we have access to global markets for our industrial customers. We also have tremendous amount of transportation and energy transportation pipelines and rail lines and those types of things that give our customers access to domestic markets and domestic supply chains. Supportive communities, and we have a lot of opportunity to grow in all of that. So there's those fundamentals are really there. When you pan back out, we see broken global supply chains are still an issue. We see a bunch of geopolitical uncertainty. So people all over the world are looking to the U.S. for investment, and when they look at the U.S., they look at the Gulf Coast because of the advantages that we have. And then you throw in the opportunities for data centers, and we're really excited about that because we are still a vertically integrated rate-regulated utility. That means we can provide generation, transmission, and retail access to those data center customers. So we are a one-stop shop. Add in the fact that we can bring all of our stakeholders to the conversation. So we can bring elected officials, we can bring community leaders, we can bring local vendors, along with, of course, the customer. We can have a very integrated conversation, and all of our customers are always thinking about speed to market. And we can bring an integrated conversation that integrates all of the potential solutions with all the potential stakeholders. We can move very quickly, and that's exciting for our customers.
And tell me, what investments are you making to harden your electrical system and make it more resilient?
So we're making a lot of improvements to drive resilience for our customers. And it starts with some of the basic blocking and tackling that we do every day. Hardening poles and wires against high winds and other perils that may be out there, wildfires and things like that. We're also hardening our balance sheet. So our investors are more resilient to storms and bad weather as well. So we've lifted our FFO to debt ratios, our credit ratios have improved, and we have built up extra capacity in our equity issuance. And as we grow and we add more investments to our system, all those investments are storm hardened or they're further away from the coast. And that means that our growth is also taking care of some of this problem. The overall base for our customer base is getting smaller and smaller every day because of resilience investments we're making and the growth in other places, so that we're not nearly as exposed to storms on a long-term basis.
Well, Drew, it's been great to talk with you. Thanks for joining me on Floor Talk today.
Thank you.